Hedge funds, once the scrappy underdogs of finance, have now taken Wall Street by storm. Their high-stakes, complex investment strategies have not only brought staggering profits, but have also embedded them in the heart of financial power. Let's dive into how they scaled up to become titans of the market, deftly wielding tools of influence, agility, and sometimes controversy. The high-stakes playground. Hedge funds hold a staggering $4.5 trillion in global assets, underscoring their massive influence over financial markets. Their ascension has been fueled by high-stakes strategies that allow them to take both long and short positions, use leverage, and pivot quickly as conditions change. This year has been a prime example. As economic uncertainty heightened, hedge funds' agility enabled them to capture strong returns. For instance, the first half of 2024 saw a surge in global macro strategies, particularly those capitalizing on fluctuating interest rates and policy changes across central banks. This has resulted in a renewed focus on fundamentals, as hedge funds rely less on broad market trends and more on specific asset behaviors to generate returns. The Hedge Fund Research Inc. Fund Weighted Composite Index, a key measure of hedge fund performance, has outpaced traditional portfolios significantly this year, particularly during periods of volatility, showcasing the advantage of their nimble strategies. Flexibility in strategy, the secret sauce. The flexibility of hedge funds in adopting varied investment strategies, from long-short equity to quantitative and multi-manager approaches, has given them a unique edge. Unlike traditional mutual funds bound by long-only positions, hedge funds can navigate market downturns with relative ease. This year, the adaptability of hedge funds has been on display, with funds like Renaissance Technologies employing complex quantitative models that adapt based on real-time market data, enabling them to mitigate risks or capitalize on fleeting opportunities. The variety of strategies in the hedge fund toolkit is vast. Managers can shift from equity to commodities to derivatives, responding in real time to political or economic shifts. This adaptability was critical during turbulent months this year when interest rate hikes and geopolitical tensions challenged many other investment models. Hedge funds' ability to pivot has allowed them to stay profitable despite these challenges. Multi-manager models, the new gold standard. The multi-manager model, popularized by firms like Citadel and Millennium Management, has transformed how hedge funds operate. This approach splits capital across various independent teams, each focusing on specific sectors or strategies, creating a diverse risk spread that enhances returns while minimizing potential losses. Citadel's approach, for instance, has allowed it to deliver consistent performance across market cycles, securing $92.46 billion in assets. This model shines especially during periods of high volatility, where one team's underperformance may be offset by another's success. By empowering specialized managers within the larger fund, hedge funds can capitalize on numerous market trends simultaneously. This structure has attracted considerable capital inflow this year as investors look for diversification in uncertain markets. And Citadel's revenue surge is a testament to the model's effectiveness. Embracing volatility. A hedge fund's best friend. Volatility is often a bane for traditional investors, but for hedge funds, it represents an opportunity to generate outsized returns. Hedge funds thrive on market dislocations, using complex strategies to capture alpha even as markets swing wildly. In 2024, geopolitical conflicts, especially in Eastern Europe and the Middle East, along with U.S. election uncertainties, created volatility that hedge funds skillfully exploited. The Hedge Fund Research Inc. Fund Weighted Composite Index, which monitors hedge fund performance, has outperformed the 60/40 equity bond portfolios due to their volatility-based strategies. Hedge funds' ability to short sell, use leverage, and execute arbitrage plays has been particularly lucrative, enabling them to thrive where others retreat. This is why hedge funds are so appealing to high net worth clients seeking strong returns in tumultuous times. Risk management, where hedge funds shine. Risk management is essential to hedge funds' DNA, as they often employ leverage to amplify returns. This requires sophisticated models to guard against potential losses. Hedge funds have leveraged advanced machine learning and predictive analytics to forecast potential risks in the market, For instance, when inflation indicators began pointing toward a potential economic slowdown earlier this year, hedge funds swiftly reduced their exposure to interest-sensitive sectors and pivoted towards commodities and other defensive assets. Their conservative stance on equities and credit has proven effective, especially in periods of global instability. Hedge funds' conservative approach has thus helped them navigate risky waters and continues to attract institutional investors looking for resilience in volatile times. Private influence on public markets. Hedge funds don't just invest passively. They actively influence the direction of companies they invest in through activist strategies. In 2024, hedge funds have ramped up activism, pushing for changes in corporate governance, mergers, or even divesting underperforming assets. This activist streak has been particularly prominent in tech and healthcare sectors, where funds advocate for strategic changes to maximize shareholder value. Firms like Elliott Management are known for such activism, and they've taken substantial positions in corporations, successfully pressuring them to pursue mergers or spin-offs. This kind of hands-on influence makes hedge funds a force in shaping the U.S. corporate landscape, as their intervention often results in significant value creation. Tech titans and hedge funds. A lucrative partnership. Hedge funds continue to invest heavily in technology, recognizing it as a future-proof sector with immense growth potential. Hedge funds have taken substantial positions in companies developing artificial intelligence, biotechnology, and cloud computing. These investments are not just passive bets. They often involve hedge funds pushing for innovative changes or strategic direction shifts. This year, healthcare and tech-focused hedge funds posted gains of 2.9% and 2.2% in August alone, highlighting the profitability of these sectors. Hedge funds like Tiger Global have capitalized on tech's high returns, betting on companies poised to benefit from emerging technologies such as generative AI and robotics. The billionaire factor. Hedge fund icons. Hedge funds have become synonymous with financial titans like Ken Griffin of Citadel and Israel Englander of Millennium Management. Griffin, estimated to be worth $37.6 billion, transformed Citadel into one of Wall Street's most powerful hedge funds, managing a remarkable $92 billion. His influence goes far beyond finance. Griffin's investments range from real estate to tech, including a record-breaking $238 million penthouse in Manhattan. This wealth and influence exemplify hedge funds' ability to create substantial personal fortunes for managers, elevating them to icons of modern capitalism. Griffin and his peers hold sway in policy discussions and have major political contributions that shape regulatory landscapes. Hedge fund magnates are not only wealth generators, but also cultural and economic influencers, using their wealth and strategic insights to extend their footprint into sectors such as art and philanthropy. Regulatory challenges and the need for secrecy. Hedge funds are known for operating in a regulatory gray area, which permits them to engage in strategies unavailable to other investment vehicles, such as aggressive short selling and high leverage trades. However, this flexibility has drawn increasing scrutiny, especially in 2024, as authorities push for more transparency around practices like short selling and private holdings. High-profile hedge fund managers face pressure to disclose their strategies, with regulators aiming to close loopholes and protect market stability. Hedge funds, however, guard their tactics closely, using layers of private companies to shield their strategies and minimize regulatory exposure. In the current year, SEC measures targeting transparency in trading have faced resistance from hedge fund lobbyists, who argue that such disclosure could compromise competitive advantage and lead to losses. This delicate balance between regulatory compliance and the need for secrecy continues to define the hedge fund sector's unique position on Wall Street. Hedge funds and the future of Wall Street. Hedge funds are poised to play a transformative role in Wall Street's future, leveraging their risk tolerance and adaptability to thrive in volatile markets. In 2024, they're not merely surviving. They're expanding their reach across diverse investment areas, from digital assets to environmental, social, and governance investments. Hedge funds are adept at navigating complex global markets, capitalizing on emerging trends such as artificial intelligence and green technology, Morgan Stanley's recent reports highlight hedge funds as essential drivers of capital flow, shaping both public and private markets with their innovative strategies. This adaptability positions them as resilient and formidable forces in the financial ecosystem, especially in an era marked by economic uncertainty and geopolitical instability. As they continue to innovate and shape investment landscapes, hedge funds are set to remain indispensable on Wall Street for years to come. Thanks for watching. Hedge funds have undeniably reshaped Wall Street, and it's fascinating to see how they continue to adapt, thrive, and influence the global financial landscape. If you found this deep dive into hedge funds' rise and power on Wall Street informative, don't forget to give this video a thumbs up and hit that subscribe button. Drop a comment below on what you think about the impact of hedge funds. See you in the next video.